What's up everyone, it's Caddy with MoneyVest. So in this video, we are going to be talking about Apple stock with a massive buyback program of about $110 billion as revenue and profitability continues to struggle to grow here. And we got lots to discuss. We got lots to unpack here for Apple because, we've asked this question to ourselves multiple times. I've asked this in the community as in regards to Apple, what is really going to be the next wave forward? What is going to be the next product or service that they launch, which is going to be innovative and something that's going to really catapult the company to higher heights here? But we still come in empty-handed because, Apple's got a business model which is very much focused on upgrades, and they're constantly, of course, copying and pasting the same model that they've been using for the last 10, 15 years of the iPhone model, which is the best-selling product that Apple has to offer to its customers. So we got lots to discuss. As always, if you enjoyed this video and find it helpful, make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below if you're interested in joining us. You can access all the members-only private videos, again, including all the trade alerts and trade ideas and all the spreadsheets. So these right here, over 50 private videos, including my 30 stock shopping list, our MoneyVest index, and of course, a lot of other really important and actionable videos. And also do connect with me on Instagram if you want to learn more about me and my personal life. Of course, I do post a lot of interesting stories and portfolio updates and P&Ls over there as well. My handle is going to be CastWRP, and we also have a sale going on in the month of May. So on all the courses, fundamental, technical analysis, options, and psychology of money and investing course, 50% off across the board, and the coupon code is going to be May50, and this is only valid for this month of May. So coupon code May50, take advantage of it. Link's going to be down below. So first things first, let's talk about Apple's announcement of $110 billion of share buybacks, proving that the company's leading area of innovation is financial engineering. And what's also interesting is that Apple's net income over the last 10 years has actually only grown by 10%. So really, it's not been super crazy. They're not growing at 20, 30, 40%. It's really been somewhat stable to slow growth of about 8 to 10% last 10 years. But the earnings per share, the bottom line EPS, has actually grown at a much faster 15 to 16% rate, because of the significant amount of share buybacks that Apple has been doing. This right here is from Twitter, so from Carl. He basically mentioned all the top companies with the largest share buybacks authorizations ever announced, and Apple takes the first 6 spots. Since 2019, they have done a $75 billion, $90 billion, $90 billion, $90 billion, $100 billion, and now $110 billion for 2024 for this earnings. And of course, we've got Chevron, we got Alphabet also up there in the top spots in the $70 to $80 billion numbers. Then we got Microsoft, but most of these are Apple here, that are doing well over $90 to $100 billion in share buybacks. So pretty significant number here. iPhone sales did drop about 10%. So EPS coming in at about $1.53 versus $1.50 per share. Revenue just over $90 billion, $90.75 billion versus just over $90 billion expected. iPhone revenues came in at just under $46 billion. So that was, again, a little bit shy of expectations here. Mac revenue 7.5 versus 6.86. So that's good because, of course, new Macs being launched with the M2 chips, and iPad hasn't been launched since 2022, so we are seeing a little bit of softening in iPad revenues. However, there's a new iPad event that May 7th, I think, when they're going to be launching a new iPad here, Apple, very soon. And other products, revenue 7.9 billion versus 8 billion expected, so a little bit shy of expectations here. So they missed on iPad, they missed on other revenue, they missed on iPhones, they beat on EPS, they beat on overall revenue, they beat on MacBooks. Services came in very strong, so that was actually one of the brighter spots for the company at 23.9 billion, and this also grew 14% on a year-over-year basis. And then we got 46.6% versus 46.6%, so basically on par with those expectations as well. So Apple did not provide a formal guidance. As we already know, they have not provided a formal guidance in a very long time. But Steve Kovac basically mentioned that overall sales would grow in the low single digits. And Luca Maestri basically said, company expected the current quarter will deliver double-digit year-over-year growth percentage growth in iPad sales. What's more, he said the services division is forecasted to continue growing at about the current high rate it's achieving during the past 2 quarters. So I think there's two things that Apple is really, really moving right now. The premium valuation comes on, I would say three things. That Apple is doing really well. Number one, services. Services is a bright spot for Apple. That's really what's keeping the ecosystem, the walled garden for Apple going. And that's one of the reasons why it's able to increase its margins, right? Margins are very, very important to bottom line profitability. And as we know, that services contribution to the overall revenue has gone from 10% to now well over 20%. And as a result of that increase, the margins are also growing. That's good. Number two, financial engineering, so share buybacks. So they're doing hundreds of billions of dollars of share buybacks, which is helping the bottom line also. So that's keeping the earnings per share very much intact and growing. And number three, which is a little bit of an external factor, I think Warren Buffett's backing and his biggest position is in Apple, Berkshire Hathaway's. That is also, giving investors always that confidence that the greatest investors, one of the greatest investors of our time, again, could be argued by some people, but one of the greatest investors of our time, biggest position is in Apple. And of course, he's basically been holding on to that stock for many, many years. So there's three really real reasons that are keeping the premium valuation on Apple, because in my opinion, there's no way Apple deserves to be trading at 27, 28 times earnings multiple or a little bit over 8 to 9 times sales. Because if you really look at the core peel under the sort of layers here, innovation is little to none, in my opinion, for Apple here, because yes, they are coming out with the Vision Pro, but we haven't really gotten any sort of updates on how the sales are doing. Apple reported, again, $23.6 billion in net income, which was down 2% year over year. And Tim Cook also mentioned that if you remove the $5 billion from last year's result, we would have grown this quarter on a year-over-year basis. And so that's how we look at internally from how the company is performing. And more importantly, when it comes to the Vision Pro, the 3,500 device is expected to sell in low quantities, especially compared to Apple's major product lines. And Cook said, quote, "We're only scratching the surface there, so we couldn't be more excited about our opportunities in that area." And Apple has not released a new iPad since 2022, as I mentioned earlier. And Tim Cook mentioned that he has big plans to announce this iPad product event next week at the Worldwide Developers Conference in June as well. So really, again, I got a question for all of you, and that is simply that, where do you see Apple in the next 10 years? Because when it comes to technology, it is one of the biggest technology companies in the world, right? So almost at $2.9 trillion market cap. So by no means it is a small company, one of the biggest ones in the world. But really, it is about the vision. It is about complacency. It is about getting comfortable. It is about, doing what is necessary for the next big trend, next big growth wave for the company, the business cycle, and just how we engage in technology in general. The company's services business was a bright spot, as I mentioned earlier. Sales were up 14% to $23.9 billion, and these right here were the overall numbers for the company as well. So 3 months ending in March 2024, $90.7 billion total net sales, which were down on a year-over-year basis, so compared to April 1st, 2023. And 6 months ending, we're basically flat to $210 billion. Gross margins, $42.2 billion, a slight increase from $41.9. And then of course, on a year-over-year basis, on a 6-month basis, it is higher, which is good. And then bottom line net income is also slightly up from 54 to 57 billion. But on this quarter, on a year-over-year basis, we did see a little bit of a decline there for the company. This right here are going to be the geographical locations and of course the product lines. iPhone revenues declining. MacBook revenues, slight increase. iPad, of course, declining significantly. And wearables and home accessories also declining. And then services, we did see a pretty reasonable increase from $20.9 billion to $23.8 billion. So almost $3 billion increase. But of course, total net sales also down. Americas was basically flat. We had Europe slight increase. Greater China was down. iPhones also did lose their positions to Huawei and some other brands in China, which obviously did hurt Apple's stock price earlier this year. And Japan, we did see a significant decline, 7.1 to 6.2 billion. And then we got rest of Asia Pacific, also a significant decline. So Greater China, Japan, and Asia Pacific with a huge decline in Apple revenue-wise. Europe was a slight increase, and Americas was basically flat. When it comes to the balance sheet, of course, Apple continues to boast a very, very strong financial positioning. $66 billion, $67 billion to be precise in cash and marketable securities. And marketable securities over here at $95 billion. So just about $150 billion in marketable securities. So this buyback program is actually quite large. I mean, this is really, really high. This is, if you do the math, $110 billion it's almost as much as the revenue that the company is generating on a quarterly basis, because $90 billion was the revenue. So of course they are doing pretty heavy buybacks here, and total debt sitting at around 10.7 billion, and their other term debt 91, so about $100 billion of debt, with total liabilities of $263 billion for the company. Free cash flows, so operating cash flow 62 billion minus capex, which was again purchase of property, plant, equipment, 729 million. So that's about $62 billion in free cash flows for the company, which is again quite comparable to what we have already seen in the last year as well. So if you come over to the technical analysis on Apple, and what I'm going to do is I'm also going to pull up the chart for our fundamental analysis calculation for Apple here. And let's just take a quick look on what the earnings expectations are for Apple for 2024, so that we can actually better understand what levels are appropriate. Actually, I did a video on Apple not too long ago, and we came to the conclusion that I think 130s, 140s would make a lot more sense for this company from a fundamental standpoint, from an intrinsic value standpoint. But let's just run through that analysis once again on a 5-year basis. So when it comes to Apple earnings estimates here, we're looking at an EPS of about $6.57. That's going to be a growth of about 7%. So again, not super crazy, not super high. So 657. We're going to plug in Apple here. And $6.57 times the share count, we're looking at net income of about $10 billion. So about, yeah, so let me just quickly do this math, because I remember last time there were some issues. Just one second. Here, let me just do this. So net income of last year, 2023, was about $97 billion. And again, this year, we're going to be expecting about $101 billion. So if you plug in $101 billion for bottom line profit, which is absolutely insane. And then of course, if we grow the net income, right? So again, we have to understand the growth rate for Apple is actually quite low, 7 to 8%. We grow them by 8%, and then we apply a P multiple, which of course nowhere near close to 30. I think 30 is a little too high. If you go with a number that's closer to, let's say, 20, and then 12% discount rate, 10% margin of safety, and a share buyback of 5% because of the insane amount of repurchases, we're looking at 126, right? So that's quite comparable to what we have seen before, very similar to what we already have talked about for Apple before. So $126. That again still requires at least a 30 to 31% drop here in Apple, and this is going to be that sensitivity grid where you'll notice a 20 times P multiple with 8% growth rate, $126. I think that's where I would be a lot more comfortable in being more aggressive in Apple stock here. And again, this right here is the overall technical analysis, where you'll notice a red candle on a green day. So even though we did gap up here, intraday there was a lot of selling. We did have a trade idea on Apple, so it's performing somewhat better now, considering that it consolidated sideways for a very long time and then a nice jump higher. Target and resistance still going to stay put at 195 to 199, but a much stronger support here in the 150s, and of course a no-brainer buying opportunity here in the tier 3 support level, aligned with this previous couple times we've dipped down to that support in the 120s for Apple. So that's where I would feel a lot more comfortable, given the growth rate, given the significant amount of share buybacks, given the price earnings multiple, given the balance sheet and everything that company has to offer. I would be a lot more aggressive here for Apple. Like, that would be my heavy buy target in the 120s for this company. So let me know your thoughts down in the comment section below, and what do you think about Apple stock, and are you buying, selling, or holding? Would love to know from you guys as well. As always, make sure that you drop a like, subscribe to the channel. Don't forget, we've got 50% discount in the month of May for all of our courses. Coupon code is going to be May 15, valid until May 31st. And also do join our Patreon and our Discord. The first week of the month is the best time to join. You get access to all the members only private videos, including my stock shopping list and my buy targets, as well as our Instagram. Connect with me there. Handle is going to be CastWRP. As always, happy investing. I'll see you all in the next video.